As investors look ahead, we see them grappling with several key concerns, many of which we believe infrastructure can act as a solution for. In this brief video, we'll go through those concerns, we'll present our data. If you have any more extended questions or concerns, please reach out to me or please reach out to your CBRE IM representative. But turning very quickly to our materials here. So on the left-hand side of this chart right here, what I've shown is some of the key concerns and questions that we've gotten from the market. Number one, what is the path forward to profitable generative AI growth? What are the prospects for slowing economic growth and potentially persistent inflation? How should I position my portfolio for that? And how can I further enhance my portfolio, whether one composed of traditional assets like stocks and bonds, or one inclusive of alternatives? And as I mentioned at the outset, we very much do see infrastructure as a solution here. We think it's a very resilient way to access the generative AI thematic. We see very compelling valuations relative to broad equities at this point in time. I'll also review some of the historical metrics and characteristics of the asset class. Think about performance amidst different inflationary regimes. And we'll also have a brief discussion on how our clients are using listed infrastructure and how we're positioning for forward outperformance. So this is a slide that I often use here to talk about the resiliency of listed infrastructure growth, specifically in the context of the generative AI thematic. I think at this point in time, it's become a truth universally acknowledged that utilities will benefit from generative AI. We need to build a lot of data centers. They will have a lot of power demand needs. Utilities are poised to effectively address that key bottleneck. But I think what is not as well recognized is the underlying conservative nature of these forward expectations for utilities. When a utility issues a capital budget to the market, for their investment program. It is a very conservative exercise. These are conservative companies who report to conservative public regulators. And so when we see a step change of this magnitude for these select companies that we've shown as an illustrative example, it is a very noteworthy development. It is one that is conservative, that has strong implications in our view for potential forward rates of earnings growth. And what you've seen over the course of time is indeed that in listed utilities, earnings follows investment. So when you think about generative AI, when you think about the potential for broad market earnings potentially to be less resilient, I would gain comfort in the relative resiliency of listed infrastructure earnings, inclusive of those resulting from this thematic. Next on valuation. Investors, a lot of questions about broad market valuations. Where does listed infrastructure stand? Well, listed infrastructure stands in a very favorable positioning. At the end of October, it was a 20% discount relative to broad equities. Historically, it's been a 7% premium. The absolute multiple of listed infrastructure flat for a decade. Right? A clear re-rating opportunity here in our view, and this is a key building block in our outlook for double-digit annualized returns coming from the asset class. Next, where does it fit in a portfolio? What has it traditionally done? So for those worried about potential slowing in economic growth or deterioration or consolidation in broad market total returns, I would again highlight the positioning of infrastructure. So over the course of the long term, strong upside capture during periods of market growth, downside mitigation, a lot of income coming from those returns, lower overall volatility. These are all things that enhance its position in terms of blending relative to traditional assets such as equities. And then on the right-hand side, what I would show right here is its history of performance during different inflationary regimes. So over the trailing 25 years, this has proven to be an asset class that has historically outperformed when inflation trended above average. And this is very much aided in our view by the cash flow mechanisms of the companies, by the oligopolistic nature of those businesses. Those are all key building blocks in the inflation historical performance of infrastructure. Lastly, just a little bit about our strategy, how we see investors using it. So I mentioned as a key component in blending against broad equities. Based on the data I just shared with you, a very clear benefit there. We also see a very strong use of listed infrastructure alongside private market solutions. And so when you think about listed infrastructure, we manage against a proprietary, north of 4 trillion addressable market cap. We provide immediate access and liquidity to the infrastructure asset class. Our exposures within a listed business tend to be more regulated by comparison to, say, potentially private market exposures. They also tend to be, particularly within large cap infrastructure, at a compelling valuation level. So those are some of the key uses when you think about listed infrastructure relative to private equity infrastructure. And we've explored this in prior research. Immediate access, strong sector contributions, and complements, and a very robust set of overall valuations on a comparative basis. Our strategy, this is the flagship composite, incepted in March of 2012, so north of a decade with this platform, has a history of strong risk-adjusted performance relative to both benchmarks and listed infrastructure peers. And I think a very strong highlight of that strategy is its consistency over time in terms of its top or second quartile returns during major rolling periods. So on top of what an asset class that we believe to be a consistent asset class, we seek to deliver consistent levels of outperformance. When we think about our positioning that can hopefully enable that outperformance today, we seek strong developed market exposures, those with the ability to access and monetize the changing load growth opportunities that we see across the global utility system. We seek a balance of regulatory exposures. Regulatory underwriting is a key component of what we do. We position for inflation performance. We've seen recent strong results from several of our toll roads who are putting forth pricing increases through into the market. Excited about those dynamics, and across a host of other sectors, whether that's data centers, communications, midstream energy, freight rail, commuter rail. We are seeking to optimize these exposures and these positioning for our investors to build on this long-term track record of which we're very proud. And so that's just a little bit from me on listed infrastructure, some of the key concerns that investors are seeing today, how we believe infrastructure can answer those concerns, and a little bit on how our investors are using our strategies in our portfolio. If you have any further questions, please reach out to me or please reach out to your CBRE IM representative. Otherwise, I wish you good luck with your endeavors over the course of the next year, and I thank you very much for your time. Thank you.